Factory activity is back in the doldrums, I'm afraid. The APSA Purchasing Managers Index has slipped to 49.2 points for October, putting the reading back in contraction territory. That's as manufacturers deal with pressure on the export front, as demand has been rather sluggish due to the rise in US trade tariffs and logistical challenges. On home ground, though, factory owners have also faced pressure, with domestic demand remaining sluggish. Redefine Properties has upped its annual dividends by 7.8%. Investors in the property firm will receive just over 45 cents per share for the year. That follows a 4.7% increase in the group's distributable income per share during the 12 months to end August. The landlord puts the performance down to portfolio quality and balance sheet strength, but despite the gains, Redefine has described its outlook as characterized by cautious optimism due to the highly uncertain environment it trades in. Nevertheless, though, the firm expects growth in distributable income per share for its 2026 financial year to be between 4 and 6%. Strong, well, that's how Altron has described its half-year results. Headline earnings per share from continuing operations rose 22% during the 6 months to end August. The technology firm attributes the growth to a standout performance from its platform segment and says its strong financial position and cash flow generation have allowed the company to increase its interim dividend. Payout of 48 cents per share has been declared. Now that's 20% more than what was paid in the prior period. Pepkor expects to post stronger full-year earnings. The owner of the Ackermans brand has forecast a rise in headline earnings per share from continuing operations of between 10 and 20%. That's as its retail operations outperformed the rest of the market, with the strong trading in a muted macroeconomic and highly competitive consumer environment. Full details will be available when the company opens its books on the 25th of November. Oceana has given shareholders some good news. The fishing and food processing company says it expects the decline in earnings to be less sharp. Initially, it had forecast a drop of at least 40% in earnings for the year to end September. That's as its balance sheet took the strain of a collapse in dollar fish oil prices, but improved catch rates in the wild-caught seafood segment in the last 2 weeks of the group's financial year have now softened this, and so headline earnings per share are now expected to decline between 36 and 42%. The Lucky Star owner will publish results on the 24th of November. Ethos Capital has selected a new CEO. Jonathan Matthews will take up the new position. That's as current CEO, Anthony de Beer, has resigned to pursue another opportunity. Matthews has been a partner at Ethos Private Equity for 11 years, and prior to that, he was at Actis for 8 years. The board says he has extensive private equity and investing experience that he will bring to the role. The change comes as the firm prepares to wind down and return money to shareholders. The latest development on that front is an unsolicited offer for the firm's remaining assets. Already, Ethos is listed its investments Optasia on the JSE and selling part of that stake, which will bring in about 370 million rand. And it's expecting to distribute its Brait exchangeable bonds directly to shareholders. And now an overture has come through. Ethos says the offer is from a large South African financial institution and would result in the sale of the firm's remaining investments for 626 million rand. This will help the group cut costs and speed up the winding down process. Exxaro sold its ferroalloys business to a consortium led by Everseed Energy in a 250 million rand empowerment deal. The new ownership includes Everseed management and employees. Exxaro says the sale aligns with its strategy to focus on energy solutions and transition metals while preserving jobs and positioning ferroalloys for global growth.